Here's what the crowd isn't seeing. Right now, Microsoft is trading at $460.52, all-time high territory, right? Every amateur is calling it overbought, pointing at the RSI, ready to short. But the price has already traced out a pattern that has trapped sellers repeatedly this entire rally. There is one danger zone and one hidden opportunity right now. I'll show you both. My name is your analyst at Alpha Market Meridian, and stay to the end. I'm giving you 3 exact levels you can trade tomorrow, including the aggressive short squeeze play nobody expects, instant market verdict. The session bias is trending, but we are inside a compression coil. Intraday, we are fading the edges until we are not. Write this number down. $456. If we get a 4-hour candle close below 456, the entire bullish structure resets. That is the line in the sand. Here's what the herd is doing. Retail sentiment indicators show traders are starting to pile into put options near the 462 resistance, expecting a rejection. The problem? The 200-day moving average is sitting way lower at 435, and price has been hugging the 10-day and 20-day like a magnet. The herd is front-running a top that has no structural confirmation yet. That is a classic liquidity trap, and institutions know it. Let's walk the technical deep dive from the highest time frame down to the scalp. On the weekly chart, the trend is unambiguous. A strong buy signal with the 20-week moving average sloping up near $422. Price is extended above it, but extensions in megacap tech during an AI supercycle are not automatic sells. The 60-week is far below, and the 200-week isn't even in play. The weekly MACD is printing higher highs with no divergence. Momentum is actually accelerating. The moving averages are in perfect bullish alignment. The 5-week at 440, the 10-week at 430, the 20-week at 422, and the 50-week at 415. This is what institutions call a hierarchical support ladder. They add size on dips toward each of these levels. Now, flip to the daily chart. Price is coiling just below the psychological and structural resistance at $462. The daily MACD is positive at 10.3, but here's the nuance. The histogram bars are compressing horizontally. That's not bearish divergence, that's a coiled spring. We see a series of higher lows since the last earnings gap, and the 50-day moving average has crossed above the 100-day. That is a silver cross. The 200-day moving average sits at 435 and is rising. The buzz phrase in the analyst community today is Microsoft 200-day test could decide if the stock has bottomed. Honestly, that article is lagging. We've already bottomed and are now miles above the 200-day. The real decision is whether the 20-day at 422 holds on any pullback. If it does, we are in a textbook trend continuation, drop down to the 4-hour. This is where the trap sharpens. Price has been oscillating between 456 as the near-term support and 462 as resistance. The 4-hour 60-period moving average sits right at 448, but that's not being tested. The 20-period EMA is providing dynamic support at 458. Here's what most traders miss. The 4-hour MACD has dipped below its signal line, and they're shouting sell divergence. But look at the price structure. Each small dip is bought instantly, creating a series of long lower wicks. That's not distribution, that's absorption. Smart money is reloading longs. The RSI on the 4-hour has cooled from 74 to 68 without price dropping meaningfully. That's a bullish reset. Finally, the 60-minute chart gives us the intraday granulus. The 60-minute 200-period moving average is flattening near 453, acting as the floor of this coil. Price is currently at 460.52, snapping back above the 20-period MA on the hourly after a brief overnight dip. This is a classic return to value within a trend. I want you to zero in on the levels. Immediate support is 456, then the strong demand zone at 438, which aligns with the breakout point from the previous. Consolidation. Resistance is the zone at 462, and a clean break above targets 474. Any daily close above 474, And we are in blue sky territory with algorithmic flow taking over. Cross-asset linkage is critical here. Watch the Nasdaq futures and the VIX. Microsoft doesn't move in isolation. It's the second largest weighting in the S&P 500. When bond yields tick lower, the present value of Microsoft's durable AI revenue streams explode higher. Yesterday, real yields compressed slightly, and that acted like jet fuel for megacap duration. Simultaneously, crude oil prices steadied, removing a macro risk-off catalyst. Microsoft is the risk asset darling right now, and institutional flow is rotating out of cyclicals and back into secular AI growth. That's the undercurrent carrying this technical structure, fundamental driver and cross-linkage. The 24-hour core news is straightforward. Citizens started coverage with a bullish AI outlook, and the stock rose. But there's a deeper narrative. The market is pricing in that Azure cloud acceleration is not just a quarter or two. It's a multi-year capex cycle turning into operating leverage. The policy divergence between the Fed's patient stance and the Bank of Japan's potential intervention is indirectly bullish for U.S. growth stocks. Why? Because any yen strength scare creates a brief equity dip that gets bought, as carry trade unwinds and now shallow. The bond market is not signaling recession. Spreads are well behaved. That means the institutional bid under Microsoft is sticky. Over the next 1 to 2 weeks, I lean directional long as the 456 level holds on a closing basis. The exact event that invalidates this view? If we get a 4-hour close below 438, that would violate the monthly pivot and the rising 20-week moving average, opening a rapid air pocket down to 426. But I assign that a low probability unless there's a sudden AI regulatory shock or a VIX spike above 25. Now, I want your input. Do you think Microsoft breaks 474 before next week's close? Comment yes or no right now. I'm tracking consensus against institutional positioning trade setups. Most people skip this section. That's exactly where the money is made. Keep watching because I'm handing out 3 complete plans with invalidation rules that you can place directly on your platform. Strategy 1, the sniper. This is the conservative, high probability play. The trigger condition. Buy on a 4-hour candle close above $462 with expanding volume. That confirms the breakout of the 2-week compression. Stop loss at $455. That's $1 below the 4-hour demand zone low, and it sits beneath the 60-minute 200 period moving average. Target 1 is 474, the prior structural resistance from the all-time extension. That gives you a $12 move against a $7 risk, roughly a 1.7 to 1 reward to risk ratio. But I want you to take partial profits at 474 and let the runner target 2 at 488, which is the 1.618 Fibonacci extension of the last earnings range. The setup is void if price breaks below 456 before the trigger occurs. Strategy 1, the sniper, conservative, entry, 462.00, 4H close above, stop loss, 455.00 take profit 1, 474.00 take profit 2, 488.00 risk, air reward, 1:2.2R, blended, invalidation. Void if 4H candle closes below 456.00. Strategy 2, the active trader. This is for those who want a better entry on a pullback, not chasing the breakout. Entry condition. Wait for a dip to the 456 to 458 zone on the 60-minute chart, and look for a bullish engulfing candle or a hammer that reverses intraday. This is a mean reversion to the 60-minute support band that rests on the 200-hour moving average. Place your stop loss at 453, which is $2 below the recent swing low and below the hourly 200 MA. Target 1 is 462, a bounce back to the range top. Once target 1 is hit, move your stop to break even. Target 2 is 470, and you trail the stop manually behind the 20-period EMA on the 30-minute chart. The stop placement logic is simple. If 453 breaks, the intraday structure morphs into a lower low, and the coil becomes a potential distribution top. Invalidation is a sharp spike in VIX above 18 on the day. Strategy 2, the active trader, standard, entry, 456.50, 1H bullish candle close, stop loss, 453.00 take profit 1, 462.00 take profit 2, 470.00 risk, reward, 1:2.8 trail, break even after TP1, then trailing 30 minutes 20 EMA after strategy 2. Here's your interaction cliff. Type your Microsoft range for tomorrow in the comments now, for example, for 56 to 468. Let's see who's aligned with the institutional flow strategy 3, the aggressor. This is high risk, and it's a counter-trend scalp for the bold. If price fails at 462 with a bearish pin bar on the 15-minute chart and RSI drops below 60, enter short on the rejection. This is not a structural short. It's a liquidity fade against stops above 462. Stop loss is tight at 465, above the local high. Target 1 is 458, and target 2 is 456. The risk-reward is about 1-to-1, but the win rate can be high if the sellers camped at 462 defend it. The explicit warning: only for those who can lose small and manage risk aggressively. If the candle closes above 462 on the 15-minute, you must exit immediately, no hoping. The entire aggressive play is void if the S&P 500 futures are up more than 0.3%. On the day, because risk on flow will crush this fade. Strategy 3 the aggressor, high risk, entry, 461.80, 15 minutes bearish pin bar close, stop loss, 465.00 take profit 1, 458.00 take profit 2, 456.00 risk, reward, 1:1.1 are invalidation. Void if 15-minute close above 462.00 or SPX futures a plus 0.3% risk management pulse. Never risk more than 1 to 2% of your account per trade. No positions through high-impact news like the JOLTS report or a surprise Fed speech. Stops are non-negotiable. This is how you survive to trade the next big move. The most dangerous thing you can do right now is override your stops because you're convinced AI stocks only go up, close and retention loop. If there's only one level you remember, make it 456, the 4-hour invalidation. Lose that, and the short-term bull thesis is on ice. Tomorrow's focus is the Microsoft and Apple joint divergence play. There's a wildcard pattern forming in Apple that could drag on the Nasdaq if it breaks its own range. I'll cover that in tomorrow's pre-market briefing. If you want the full breakdown on Bitcoin and the S&P 500 divergence right now, that video is live on the end screen. Tap it. Smash the like button if this gave you a clear, executable plan. Subscribe, hit the bell, and I'll see you in the next one, because the move is setting up while everyone else is arguing about overbought RSI. Let's make the trade.